Thanks for clicking. Canada's real estate market is losing its froth, becoming less bubbly. It's cooling down. This was the message coming from Don Kottick, President and CEO of Sotheby's International Real Estate.
To summarize, the froth is really coming out of the market.
Real estate numbers are coming in from across the country, and it looks like Canada's real estate market is in for a big slowdown, as major cities like Toronto, Kitchener-Waterloo, Vancouver, and more are all experiencing major price declines and major sales drops.
What?
I know, and there are of course exceptions, but we'll get to that. So what I want to do today is briefly go over some of the major price declines that we're seeing countrywide. Then I want to discuss some of the trends that we've seen specifically in Toronto, but also my hometown and elsewhere in the country. And then I want to go over what to look for next. We still don't have nationwide statistics on Canada's real estate market as a whole, as it takes the CREA a little bit longer to compile the data than it does for the local real estate associations. We will be having updates out on that data when it comes out. Click like and subscribe if you want to get those updates, but for now, let's get into these local markets. Toronto's average real estate price sunk 6.4% in the month of April, its biggest drop since 2020, when everybody was worried about COVID and nobody wanted to buy.
Those were the days.
Well, the average price in Toronto fell to $1.25 million. Sales were down 41% from this time last year and 27% from March. So the number of sales are dropping, as are the prices, and this is happening almost everywhere. If we look at Kitchener-Waterloo, where the average price just over 2 months ago hit over $1 million, that price dropped by $100,000, down to $907K. So that's $100,000, 10% price drop in just a little over 2 months. Real estate in Vancouver is also slowing at a rapid pace, with sales down 34.1% from this time last year and another 25% from March alone. Montreal sales are down 17% as well. There are obvious exceptions. Calgary, which has been undervalued for the last couple years, is setting records for its real estate sales.
Calgary, is the most affordable spot in the country right now. So, we are seeing increased activity.
But overall, there's a downward trend on sales and on sale prices occurring Canada-wide in our real estate market. And brokers, both real estate and mortgage,
I'm a person too,
are seeing similar trends everywhere. Mainly, more sellers than buyers, which brings with it lower prices. Toronto realtor Desjardins noted that while properties are still selling, there's definitely a slowdown as many homes are just sitting on the market. And when properties just sit there, when no interest is shown, or when there aren't multiple bids, or any bids for that matter, leverage switches over to the buyers and prices fall.
Well.
And many sellers still haven't accepted reality, with many still underpricing their homes on the market, hoping to incite a bidding war, and then there are no offers, very little viewings, and the house just sits on the market.
Like, we still have some sellers right now that have, expectations of the market when it was a little bit frothy. So they have to, basically get their kind of thoughts in line with the market reality.
And I've definitely seen this as well in my hometown of London, Ontario, which also experienced significant price drops in April as well. Not only did we have significant price drops, but our months of inventory nearly doubled in the month of April. We had 0.6 months of inventory as of March. That went up to 1.2 in April. So, as of April, if no more homes hit the market, it would take 1.2 months for all of the homes to sell, for there to be no homes left for sale in our market. And that doubled from what it was in the month of March. So clearly, there are a lot more sellers than buyers at this point, and that is pushing down prices. Some sellers, for their part, are accepting reality, and we are starting to see more conditional offers be accepted in the London area, and we're hearing more and more that this is happening in Toronto as well. So we're seeing more sales volume, we're seeing less demand, and we're seeing more conditional offers, and more homes just sit on the market. Definitely a major shift in Canada's real estate market. This all would have been unheard of 2 months ago. So in just 2 months, things have changed drastically. And obviously, the most likely reason for that change is the interest rate hikes that have come down the pipe in the past 2 months. In the past 2 months alone, the Bank of Canada has raised rates by 75 basis points, and mortgage rates have gone up as well. With buyers and sellers both aware of these rate hikes, with sellers trying to cash in on the peak of the market, which is looking more and more like it's past, and buyers not sure if prices are going to continue to come down, they're waiting it out. They're waiting to see what happens. They're waiting to see if they can cash on this what appears to be a big market fall, a big market reversal. At least in most cities, most of the data that we have seen coming in the past couple of days. And like we said, that's just with a 75 basis point rate hike. The Bank of Canada is set to raise rates on June 1st and again in July. Probably many analysts are thinking by at least 100 basis points. So if 75 basis points can cause this much of a reversal, you would think that a 100 basis points further rate hike is going to cause even more reversals, even more slowing of our real estate markets. For its part, Desjardins recently predicted that mortgage rates could climb over 7% by next year alone. If rates go up over 7%, that would make your qualifying rate at 9%. So when you go to qualify for a mortgage, you would no longer be qualifying at 5.25% that most buyers were qualifying for over the past few years. Instead, you would be qualifying at 9%. That is going to put a major dent in most people's affordability, in the amount of mortgage that most people can afford. It will undoubtedly have a major impact on our real estate markets. I think it's too early to say crash, but if most buyers did have to qualify at 9% interest,
yeah, that'll do it.
Speaking of affordability, I am going to have an update out on mortgage affordability with the new rates in anticipation of the Bank of Canada's announcement. We will have that probably the third week of this month. Click like and subscribe if you want to get those updates, and thanks so much for watching.